Hello again. Welcome to our look at the upcoming Thursday, October 2nd trading session. In front of you, I have the economic calendar. And as you can see, we have a couple different announcements coming out during the day that are of some strength. Out of the UK, we have construction PMI for the month of September, anticipated to be 63.5. Honestly, though, I don't anticipate a massive move based upon it, possibly giving a little bit of a reprieve to the FTSE, but beyond that, I don't see much else. Looking at this chart, or looking at the calendar, I can see that the euro has an interest rate decision coming out of the ECB, anticipated to be 0.05%. This is one of those deals where the rate decision itself won't matter. It's the press conference. Whether or not it looks likely for the ECB to continue monetary policy loosening, which could weigh on the euro. Right now, though, it just does not look like the euro is going to get much of a reprieve. And quite frankly, any rally in the euro will only invite selling, or in this case, put buying. Looking at the S&P 500, you can see that during this session here on Tuesday, we are testing the 1950 level. Now, 1950 is going to be significant support. Quite frankly, we'll have to see whether or not we close below that. So far, we don't look like we're going to, but bad construction numbers coming out of the United States definitely put a little bit of a weight on the S&P 500. We're still in an area, though, that could show signs of support. We are getting close to a trend line as well. So really, we're looking for some reason to start buying calls. We don't have it yet, but a supportive candle would, in fact, be very welcome at this point. Looking at the euro dollar, you can see we continue to meander around the 1.26 level. With the interest rate decision, we'd love to see some type of bounce here in order to sell any rallies, especially around 128. To be honest with you, though, I don't know if we're going to get it. We're going to be buying puts on rally short-term charts. The interest rate decision, of course, will cause chaos, so be aware of that. If you are not comfortable with taking the risk, perhaps this is a market to ignore at this point in time, at least for today. No interest whatsoever in buying call. Looking at the FTSE, you can see it's been an absolute mess again during the session on Wednesday. But with those British numbers, there is the possibility we get a little bit of a reprieve. Quite frankly, we're getting to pretty low extremes. You can even make an argument for all of this just being consolidation. So somewhere around 65.50 we found support. Might go as low as 6,500, but really at that point in time, we would anticipate to see some type of supportive action. Don't have it yet, but we're getting too close to the bottom now to start buying puts. So what we're going to wait for is a supportive candle in order to start buying calls, because quite frankly, the risk to reward ratio is so good. We've been watching the silver market for some time now and recognize that the bounce that we've seen during the session could offer a nice selling opportunity closer to the 1750 level. On signs of resistance, we would buy puts on short-term resistive candles anywhere between 1750 and 80. We believe that this market will continue to fall. There's no real bottom in sight. Probably 15 is the next significant area. So really, we think that any rally at this point in time is simply going to be a put buying opportunity. And with that, we have looked at the upcoming Thursday, October 2nd trading session.